Welcome to the Talking Tenancies podcast, brought to you by the Residential Tenancies Authority. I'm your host, Belinda High. Join me as we explore everything you need to know about renting in Queensland with experts from the RTA and industry. We're here to help make renting work for everyone. In this episode, we take a look at how bond money is managed at the RTA and where your bond money goes once it's lodged. Today's expert from the RTA is Eric Stow, our financial controller in our finance area. Welcome, Eric.
Oh, thank you.
Can you tell us about your role at the RTA and what you're responsible for?
Okay, my role as financial controller is I manage the finance team, and the finance team's major functions are the looking after the investments for the RTA and also the accounting for the expenses and other aspects of the financial services role.
Yeah, you're a really important guy to know around here. Now, it's a common misconception that the RTA is funded by taxpayers' money. This isn't true. How is it funded?
Well, the RTA is a self-funded statutory authority, which means we fund ourselves and we receive no state government funding through that's from taxpayers' money. So the way we're funded is we invest the bonds that we receive. So those bonds we invest with the Queensland Investment Corporation. They invest in different funds on our behalf, and the returns on those funds is what we use to run our operations.
So what are the challenges we face with our funding model?
Well, some of the major challenges we face, as with any investment portfolio, is potentially poor returns. So in an instance where the market does have a poor year, the RTA will have lower revenue and then potentially have a deficit for the year. So the RTA then has to invest in the lowest possible risk assets, which means that we have to invest in things like products that pay interest rate style returns. And given that we're in a period of record low interest rates, that means there is a lot of pressure on the RTA's revenue. So what that does for the RTA is encourages us to try and be as efficient as possible and reduce our costs where possible. So the things we're doing in that space is to try and introduce more self-service things like the web services program, and also streamlining other internal processes to minimise costs. Until such time that we can come back to a position of surplus. Yeah, so
just touching on the web services project there, so that's minimising a lot of the printing that we do, which was at a significant cost, and it's also giving efficiencies to the industry because they can do everything online. So yeah.
Yeah, that's right. So it should save the RTA's costs and also, as you say, the industry's cost as well with time, paper filling out, postage costs on both sides and printing.
Yeah, excellent. So when a bond is lodged with the RTA as a security deposit at the start of a tenancy, where does that money go?
Okay, initially once the money is received at the RTA's bank accounts, we usually transfer it into a secondary bank account which is held with the Queensland Treasury Corporation. Who provide banking style services to the RTA, but pay out at a higher interest rate than normal banks would. Once the money is held there with QTC for a period of time, and we're now in a position where we can invest with the QIC products, we then then make that investment. So those investments are based on targets which are set by the RTA board and approved by Queensland Treasury. So when those funds are available and those the investments targets are there to be met, we'll make that investment at that time.
Yeah. So just out of interest, how many bonds are lodged with the RTA on an average year?
Last year, for an example, we had 267,000 bonds lodged over the course of the year, with a total at the end of the year of 621,000 bonds.
That's a lot of bonds.
It is a lot of bonds. And overall, that value of the bonds as at 30 June 2019 was $897 million, which works out to an average bond value of about $1,400 each.
Yeah, which is, standard kind of rent value. So what happens with unclaimed bond money then?
Unclaimed bond money is interesting. So what happens when a claim is put in to refund a bond? The RTA attempts to send that money back prior to 2016, where that would have been sent by cheque. Now we do everything via EFT. And if that cheque was never presented, or if the bank, that money that we've tried to send through the bank is then returned, we'll try and email or contact the customers to get an updated details. But if it's not, we just hold on to that money until such time that we can contact the customer and refund the money.
Yeah, so I guess that change in technology again is there for us going to the EFT. So we'd probably see a big change of a lot of checks floating out there in the ether.
Yeah, that's right. We would expect unclaimed bonds to decrease compared to what they were historically. Also, with the ability to use the web services to provide refunds, there also should be less chance of insufficient bank details because it is a requirement to enter those bank details on web services. So we would expect those unclaimed monies to decrease.
Absolutely. Because people are taking responsibility for it themselves and they want that money, right?
That's correct.
Is there a lot of variation on the amount of bonds and their value that's lodged with the RTA each year? Does it change much?
It does fluctuate year to year, especially the new bonds that are lodged. Generally over a 10-year period, we see an average increase of about 1% per year. But that can be as high as 4% increase or as low as a negative 2% decrease, which is what we experienced last year. The value of the bonds, however, is steadily increasing because that's generally in line not just with the number of bonds but also the increases in rent that we're facing through the market. So, over that same period of time, we saw the bond value increase by about 6%. And that's also helped by the fact that bond increases are paid so we have the incremental increases on bonds that are paid when rent increases.
Yeah. And there'd be a little bit of CPI increase in there as well, wouldn't there?
That's correct on the bond value.
Yeah. Bond refunds would also balance out those figures too, wouldn't they? So as bonds come in, refunds would also be going out to balance things. Yeah,
that's right. So obviously we didn't increase, if we were holding $600,000 total bond, we didn't have a full increase of $260,000 in that 1 year.
Yeah.
So overall, out of that $267,000, approximately 252,000 bonds were refunded, giving us a net increase in bonds of just under 15,000.
Yeah. Obviously, since 2009, we've seen, a little bit of an increase each year.
Yes, that's right. So the number of bonds are increasing each year by around that 4%.
Excellent. Well, I'll tell you what, Eric, I know a lot more about bonds now and how we manage finance here at the RTA. Thank you so much for being our guest today and keeping us informed on finance.
No worries at all. Thanks very much.
If you want to find out more, visit our website, rta.qld.gov.au, and you'll find all the details in our annual report. Thank you for listening to the Talking Tenancies podcast. For more information about the Residential Tenancies Authority, visit rta.qld.gov.au.